So this is looking at it from a much longer term perspective. Now, the way I look at it is a high volume and a low volume node can both act as support and resistance. I.e., on a large move, I'm going to be looking for any clear high volume and low volume nodes as areas potentially to get out of trades, as targets. The reason for this, if you get a fast move, that's where you're going to get some kind of reaction. Now, it's either a reaction on a high volume node, because that's the area where you have got a large amount of trade. There's no clear level there, and that's where sometimes when you see a market just stop in the middle of nowhere, this is often because there's a high volume node. Whereas you get a low volume node down here, and that is very frequently these previous highs. So the low volume node is very understandable in terms of why they create a support, a resistance, or a target. You're going to get people, as the market approaches these previous highs here, covering short positions. So that's the first reason I look at them. I particularly like a low volume node if it coincides with support or resistance. Where I find low volume areas slightly tricky, like here, is there's not one particular point that the market is likely to stop at. I find these type of low volume areas the kind that can trade all the way through, because it's a whole area of no trade at all. Whereas the singular points, I think this is a nice little example down here. Oops. The singular points are where you've had previous resistance or previous support, that's then broken. So that's clearly a little bit of a pivot area. So that's the difference between a low volume node and a low volume area. So that's your low volume node. That is your low volume area. That's your low volume area. So what you're looking at, and this is why the high volume becomes support or resistance, because it's often at the end of the low volume area. Now you get this little peak of volume, or peak of higher volume, which is what happened here. There's your peak of high volume, and there's your area. DAX on the first move down, I believe, did hold just on the top of this area, but where we did manage to hold very nicely is this previous high volume node. Ignore this little high volume, because on this move down, this obviously wasn't there. So there's your peak of volume. Oops. And that's where we close. That's where we drop down to. Now, after that, you'll notice what happens is we start filling in this lower volume area up above. And actually, this previous area of high volume becomes a little bit of a pivot area. And we spend quite a lot of time finding support at that area. So actually, I find that over a bit of time, on the longer term time frames, the high volume does actually become a little bit supportive when we first come down to it, particularly if there's low volume above that needs filling in. And once again, high volume up here becomes a little bit of resistance to the upside. We won't always quite get there. But that's how I would look at it. And then that's why you can start thinking to yourself, we are likely to spend some time chopping in this area, because that's this low volume area. Likewise, if we drop through, we've had a few goes lower down here, and no real solid hold below. If we do start dropping through, then I think the next area, there's your next bit of, you've got this very low volume here. I think that's going to be a point that we should stop at the first time, because that for me is a very clear low volume node, sandwiched between high volume either side. And then you've got this higher volume area down here. So I would be considering a move right the way down to that little bit of high volume, and then we could end up again with this similar type of trade in these areas here. pivoting perhaps around this little peak of volume. So that's how I sort of see it on a longer term time frame. The way I use these reference points on longer term is if we're getting a very fast move. I'm not sort of thinking about it if we start drifting down to areas in the same way that you would use a support or resistance. You don't sort of act on a support level. And this, again, just one little thing I didn't point out. Like a support level, say you've got an area of support. The market comes down to it and trades just above it. I'm then thinking that's more likely to break. Whereas if a market trades straight down to it, then it's more likely to hold. So it's all about the way it does it. Same with these high volume, low volume areas. So a bit of time, again, spent just above a high volume area makes it more likely that that is then going to trade straight the way through.